Does everyone see that? I don't have the slide up yet. I'm going to get the slide up here in a second. There's Dan is chatting. Dan got it. Okay, good. Okay, let me know if you see the slide. Oh, there Paul's chatting. Steve, do you know how to chat? Again, Steve is trading options with me. It's been a good week. There's Andy. Okay, good. Welcome. We're going to get started here today. If people come late, they come late. I'm going to talk today. If you have questions, you can ask me here in the chat. I will see the question live. Or you can always email me after the fact. My email is melissa@thestockswoosh.com. And I trade every day, Monday through Friday. I run a live trading room in the morning, and I do day trades on margin, and I also trade options. Now, again, I've been doing this for, gosh, I can't even believe it, 18 years. It's crazy. I can't believe it's 2026. So I've actually been trading now longer than I did my previous career, which was mortgages and banking. So I love trading. I teach a class on my method once a month. I don't do anything else other than gaps, and that's what we're going to talk about today. So I really am extremely focused on what I do. And as far as, the business and an educational place, I only do, one thing. So that has allowed me to excel in this one particular thing, which is gaps and mostly shorting, which we're going to talk about today. So it's not like I teach futures and Bitcoin and all this other stuff. No, I'm an expert in one thing. As the years have gone on, I've gotten better and better and better, and this is all that I do. And really, you only need one system or one strategy to make money in the market, and then you can add size to it over time as you go along and grow your account, okay? So I see some people coming in late. If you have a question, you find my name. You have to find a little box that says new chat, and then you can ask me a question in the chat box if you want me to answer it live. You can also email me too, but this would be easier if you're here live and you have questions. And we have a question from somebody. Let me see. Oh, there's Steve. Okay, good. So we're going to talk about trading for a living in 2026. Here we are. We're almost halfway through January. I can't believe it. Tomorrow's the 14th, Thursday's the 15th. That's crazy. I feel like it was just Christmas. I was visiting my family, and now here it is. We're halfway through January. Before you know it, it's going to be Valentine's Day, February, and then the spring. So time just seems to be flying. So you don't want to waste it. That's the whole point. If you really want to trade, if this is something you really want to do, if you're excited about it, you're motivated, you want to do it, don't wait. Because before you know it, it's going to be July, August, and the year will be over. You have to take action if you want to make your dreams come true. So I also appear on TV, I appear on Fox and pretty much every other channel, talk about the stock market, talking about the economy. If you want to know when I'm on TV, the best place to find that is to follow me on Twitter, or what's X now. I usually post on there my TV hits. You can also call me if you have questions at 929-3200-GAP. I will answer the phone. If I don't answer the phone, you can leave me a message. I'll call you back. And you can email me if you have questions after today as well. So again, like I was saying, it's 2026. It's time to succeed. I'm not a big person on New Year's resolutions. But I'm very goal oriented. So like at the end of last year, I was already starting to think like, what do I want to accomplish this year? Now, again, if you are into resolutions, like you want to, quit smoking or drinking, everyone's doing the dry January thing, or maybe you want to lose weight, whatever your goal, your resolutions are, that's fine. But I think goals are important. Setting goals for yourself. Maybe it's changing careers. Maybe it's moving, buying a house, or maybe you're trading already and you're not making money. Maybe you're losing, or you're not making as much money as you want to make. So again, it's time to get organized and set goals. We're coming up, this coming weekend is actually a 3-day weekend. Martin Luther King Monday, and the market's closed. So like a long weekend like this is a good time to do some goal setting and get organized, for what you want to accomplish this year. It's also a really big year here in the United States, especially in New York. There's going to be like a bazillion things happening here in New York City this summer. A lot of people, a lot of tourists coming here to New York this year. We already had the Times Square had a special ball. I don't know if you saw that on New Year's Eve for the 250 America, which is also going to drop on July 4th. So it's a big celebration, a big year in America. I've been watching this history, not the History Channel, it was on, actually was on Fox Business. There were some historical shows. It was talking all about the American Revolution. It was really interesting. I'm really into history. I actually graduated from Gettysburg College. And you may not know this, but the Battle of Gettysburg actually took place over July 4th. People don't realize that. So again, I'm really into history. Love the United States, love America, love New York City. I'm going to be doing celebrations all year long for the America 250. And even if you're not an American, you can still come and tour America. There's going to be lots of events. One of the big events, and I'm probably going to go on my roof actually to see it, I have to get the dates, is they're going to have some kind of ships, naval ships that are going to go down the Hudson River, and I can get up on my roof in my building, and that's going to probably be the best place for me to see that. I think that's going to be like July or something like that, but there's going to be all kinds of things happening all across the country. And you want to get involved, and I'm doing a special for this week for the America 250, which I will talk about at the end. Dan is excited about it too. Very good. Are you into history, Dan? Is that what you were saying? Yeah. So we're going to be talking a lot about it. And, you know, one of the things I talked about actually in the email the other day, or maybe it was today, you know, we don't realize how easy we have it. We have it so easy. 250 years ago, people did not have it that easy. You know, we complain about having to go to the store or something. I mean, we have it so easy. They didn't have cell phones 250 years ago. I mean, they didn't have a lot of things. So it's like we don't realize how, what a world we live in now. And again, there's so many things that we can do. So, you know, trading is certainly something that you can do. It's certainly something that you can accomplish. It's certainly a dream that if you have that dream, you shouldn't let anything stop you. Because again, we live in a society, in a world today where really anything's possible. Anything's possible. So it's the American dream to become rich, successful, and financially independent. But a lot of people want to trade the market and they don't have a plan to make that happen. So again, you need a plan. It's very, very important. And for me, very early on when I started trading, I realized that I only needed one good trade a day to make money. I realized I only needed one system, one strategy. And when I traded, I made a lot of money. I was actually in a short and it was in a gap. And I said, oh, there's something to this thing with gaps. So I'm telling you, the best advice you can take away from today is that you only need one strategy and one focus to make money, and then that's how you will get good at it. Because if you're all over the place, you're never really going to get good at anything. And I found with people, again, I've been teaching people for a number of years, I found people are just not focused. They're easily distracted by the news, you know, social media, or jumping from thing to thing to thing. You're not going to make a lot of money doing that. In fact, you're probably going to lose. You're probably not going to make any money at all. You know, your dad was a World War II vet. Oh, good for you, Dan. That's great. So anyways, being a trader was my goal. I wanted to change careers when I started. Again, it was in 2008, but I didn't know what to do. And now that I figured out what to do, you know, I'm just, every year, I usually bump up my risk a little bit. Like I just bumped up my risk this month. You know, and the time to do that really is earnings season. You don't want to bump up your risk when it's like a holiday or something. But earnings season started today, and you know, this is the time to trade. This is the busy time of the year. So what does it take to do this? A system, that's what you need. And you need a winning system to trade the market and be successful. So as I was saying, my strategy is gaps, and I'm going to go over what a gap is in a minute. But stocks that gap in the morning really have big moves. Today we did Visa, and I do have that chart in here. We'll go over it. It was a huge move, and it was a short, okay? And I'm looking for a very clear directional bias that I can get preferably for the whole day, or most of the day, or a big move in the morning. And really seeing that gives me an edge because I can get into trade very, very early, okay? So for example, I might call a put in something at 7 a.m. Market doesn't open until 9:30, but I might see hours before the market even opens that something's going to work, okay? So if you're on the options newsletter with me and you're trading with me, you can prep yourself, get ready, get organized, say, Melissa's looking at this today, I'm gonna do it, and then you do the trade after the market opens, okay? So again, what are gaps? We're referring to an event that happens every morning in the market. So a gap is a difference between the close and the open. Every day the US stock market closes at 4 and opens the next day at 9:30. Stocks that are closed overnight often have news that come out when the market is closed and they're not trading. Or we could have, Trump could tweet something, could be a million different things, okay? So we had the news about Powell. Remember, that was Sunday night. Powell dropped that video, and that created a gap on Monday, okay? Because the market was closed Sunday. Shows lots of reasons that things can gap. Another reason is earnings, which I said the earnings season started today. Companies report their quarterly earnings. There's 4 earnings seasons a year. So anyways, the next morning when the market opens, these stocks open very often at a price that is way above or below where they closed the night before, okay? And this means there's been a big move in price without anyone being able to buy or sell. And this can create urgent situations for investors or traders. Now, a lot of people like to trade gap fills. I do not do that. And I will tell you that it does not consistently work as a method to make money in the market. Remember, sometimes anything can work. You could take just a crap trade and make money sometimes. That doesn't mean you should do it every day. You know what I'm saying? You have to find a system that you can consistently use to make money. Hey, some trades I take don't work. Some trades I take lose. But more trades that I take win than lose. And that's how I'm able to do this for as long as I'm doing it. So again, the point is to win more than you lose and also to have some big winners. Again, Visa was a nice trade today. But you're never going to get to the point where you have no losses. You have to manage them by having more winners and also having a consistent risk per trade, which we can talk about later too. So anyways, gaps happen where? On a daily chart. Oh, so here's Microsoft. This is another trade that I called to put in. Steve, I see you're here. Steve, did you do this one? I think Richard's here too. Richard is new. Richard signed up for the class. He's doing the class next weekend. Richard's already trading. Anyways, here's Microsoft. So what's a gap? A gap is the difference between the close and the open. So Microsoft closed here, snug as a bug, at 4 o'clock, gapped down today, fell off a planet. Okay? So again, a gap down was depicted here. Now, what's a gap up? A bullish gap is when it closes at 4 and opens at a different price but higher. So this is a closure of 4:30 or 4 and then an open at 9:30 and it rallied. In this case here, this is a bearish gap. So we were already in this today before the stock fell. Okay. Steve didn't do this one, but he did Visa. Okay, very good. Anyways, mostly I short. That's really what I've gotten a niche in. I will go long. One of the longs we did that was a nice one with CVX, but I do prefer to short. So shorting is fun because you can make money fast. Why? Because stocks fall faster than they rally. And that's just the fact, okay? So really, I got into gaps because they have big moves and they're a very specialized strategy. Not a lot of people even understand what a gap is, and they certainly don't even know how to trade them. And like I said, a lot of people do gaps for gap fills, and that's wrong. If you want to make money in the market, you need to think and act like a true professional, like you were running a little small hedge fund or something. But again, a lot of people, unfortunately, act like it's some kind of, computer game or whatever, where they'll buy a stock and short a stock the same day, the same stock. I never do that. You have to take this very seriously, as if you were trading big size, even if you're not. As if you were doing this full-time as your full-time job, even if you're only doing it for an hour a day. That's how serious you have to be within that period of time that you're trading. And again, professionals have specialized strategy systems and reasons for taking trades, and it's really not hard to understand why. Why are gaps so profitable? Because they have these really big moves, fast moves, large moves. Remember, we're following institutional money. You say, well, what's institutional money? Institutional money is when a hedge fund or a large trader or a big bank takes a position long or sells or shorts a stock. So if you as one individual want to take 500 shares or 1,000 shares, that's a small position in any stock that I would trade, which has millions and millions of shares. But if the stock is moved by institutional money and drops $2 and you have 500 shares, boom, you're going to make $1,000. That's great, okay? And again, that's real money. And you replicate that Monday, Tuesday, Wednesday, Thursday, Friday. All of a sudden, you're putting together a week, you're putting together a month, and then all of a sudden, poof, you're doing this for a living. Again, it's a consistency, which is extremely important, and that is what a lot of people just don't understand about doing this. And I was saying earlier about the risk. Your risk should be consistent too. So you can't risk $1,000 in one trade and $100 in another, because inevitably the one you risked $1,000 will lose, then the one that you risked $100 will go on to win. Even if that trade would win and make 500% return on investment, you'd be still down $500. Do you see why you can't do that? Again, you should be looking at it even Steven and trying to make 1-to-1. So again, there's lots of gaps that are happening all the time for lots of reasons. How are you going to find and pick which gaps to play? Well, I developed a system to do that. This is what I teach in my class once a month when I'm teaching in the class next weekend, January 24th to 25th. It's the first class of the year. I rank gaps. I go through the process. I look at 26 points. You say, well, how do you have time to do that? That's crazy. You make time. You give yourself an hour, maybe a little bit longer, to prepare and get ready in the morning. The longer that I take to get ready to trade, more prep time, the better I actually trade. So again, I'm trying to make as much money as I can, and I'm trying to find the best stock, and there's thousands of stocks every day. So yeah, give yourself an hour. Give yourself an hour and a half. Get up early, get organized, go through the process. Because then you're going to be less stressed when you trade, because you're going to have 100% conviction that you're like, this is good. In fact, I posted the video. If you have time, you can go watch it. I posted the room video today. In the first 2 minutes, I said, I don't think anybody here was in the room. No, I don't. Is anybody here in the room? I don't think so. Some of you are trading options with me. I don't think any room people are here. Richard, you've got to get to the room, so you make sure you know how to get in and chat and stuff. Or Rick. I'm calling you Richard, but Rick. I said today in the room, Visa's the best gap. This is really the best gap. This is the best gap. I've said it like 3 times. So you can go listen to me live talk where I said this is really the best gap. And it was, actually. So again, that type of prep is what allows me to, situate and focus on Visa versus the thousands of things that we're gapping today. Do you know what I'm saying? And any questions, again, I saw some people come in late. You have to chat me directly. You pick on the little plus button that says new chat, and you type a question into me if you have a question. That is how you chat me. If you want to ask me a question while we're here. I see some new people, some regulars, but that's how you'd ask me a question. Anyways, I developed a system. It's called the Golden Gap. The Golden Gap system is a 26-point professional bearish gap rating system. The purpose of the system is to help you evaluate which gap to trade each morning using a checklist. This checklist tells you what to trade and when. Again, that's what I take the time to do in the morning. If you want to make money, everybody does, okay? If you don't have a good system, it doesn't matter how serious you are, how focused you are. If you size yourself the same every day, again, you're not going to do well if your system doesn't work. Now, I found from talking to people, I'd say even the last couple of weeks, a lot of people were going long in 2025 and buying every dip in strong stocks of the market. That pretty much stopped working in November. People are still doing it, but people are already feeling the chop. Buying the dips does not work consistently unless you have a strong trend in an uptrend and the market with you. That is already pretty much stopped. So I did a video earlier today as well where I said, listen, if you don't know how to short this year, you're not going to have a good year. You need to know how to short stocks. Buying every dip in 2026 is not going to work. It has already not worked so far this year, and it stopped working really towards the end of 2025. And that's not what I do. But again, we could talk about going long more later. Getting back to what I was saying, I'm looking for the fast moves. First half hour of the day, pretty much done usually the first half hour of the trading day. And I'm looking to get a very limited risk, okay? Even when I'm doing an option, maybe I do it out for a week and a half, 2 weeks. Like that's a long time for me. I'm usually doing the weeklies, the Fridays. I'm not saying I never do something out for more than 2 weeks, but it's rare, okay, that I would do that. So even the options I'm doing, I consider the trades very fast, quick trades. And again, when I'm doing day trades, when I say I'm trading in the room, I'm trading on margin where I'm shorting the stock, and then you have to have a margin account to do that, okay? Now, some people are trading prop. That's fine. Otherwise, you go to a retail broker and you find out how to set up a margin account. Now, if you want to trade options, you don't need a margin account. You can open up a cash account and trade options that way too. But again, you have to still know what you're doing as far as your risk to enter the trade and exit the trade. And again, I've seen some people come in late. If you want to ask questions, you chat in the room. You have to chat directly to me. Anyways, the system tells you how, what, and when. How to make money in the market. Trade a strategy and system that is profitable. And you can do that. That is how you actually can get somewhere with this, where you can do nothing but this. And then this is your career. So golden gaps are a highly profitable strategy because they focus on large momentum to trade. What stocks should you trade? Stocks that gap and rate 20 points or more per the 26-point rating system. So I'm not looking for a perfect score. Yes, I have 26 points. Yes, that's what you learn in the class, but I don't have to have 26 for every day. I'm rating it. I figure 20 is good enough. At the higher the gap, the better the gap, the more I'm going to go with that one. And I'm always trading the gap in the direction of the gap. And again, when do I trade them? Early in the morning when they set up and trigger. I'm using, 20 grand a month as an average to make a living. It depends where you live. Some places that are inexpensive, you live in the world, you could get away with $5,000 a month or 60 grand a year, as an income. Some people retire, they have other sources of income, retirement, Social Security, pensions, and they trade on the side. And then there's some young people that I'm teaching, and they want to quit their job, and they need to make more than $20,000 a month in order to do that. And they've got to build up their accounts to be able to take the risk. Once you know how to trade, once you have confidence in what you do, trust me, the sky's the limit. It's like if I could make a perfume or a cologne, and call it the stock Swoosh perfume and sell it, I'd be a billionaire. Because it's like there's no way for me to impart on you the same confidence that I have. Why? I developed the system and I've been doing it longer than anyone, and I teach the class every month. So even when I do the class myself, when I'm teaching it, like next weekend, the 24th and 24th, I am constantly reinforcing what I know, and I also invented it. So again, a lot of people don't stay with whatever they learn whenever they jump from class to class to thing. Again, I used an example earlier. People are doing crypto and Bitcoin and futures. They jump around so much. If you stick with this, the best, most successful people that I have with me are people that have been with me more than 10 years. And they're with me and they rejoin every year. And again, I'm here for you if you have questions, if you want to learn how to do it. But you can jump around from thing to thing to thing. Paul is asking, what size account is recommended for a beginner? If you want to trade options, you can open up a cash account. I think 5 grand, if you want to do that, is decent. And I wouldn't risk more than 200, 250, 300 the most per trade. Now, you can open an options account with $2,000, but then you could really only be in one trade at a time. And I really wouldn't risk probably more than $150 a trade, maybe 200. That's still a lot. You're not going to be able to do all the trades. Now, if you want to trade on margin, you have to have a margin account. So if you don't go prop, you're going to need 25,000. Again, 25,000 is a minimum at a retail place for a margin account if you want to short the stock, like we shorted Visa today. So one of the reasons why people love options is you don't need a margin account. You don't need to have 25,000. But there's a lot of prop places out there you can investigate, you can look into. Some are good, some are not good. I'll tell you that right now. I can't recommend one more than the other. It's been a long time since I traded at any prop place. But I'm telling you, do your due diligence if you are going to go prop. Unless you just want to do options. You could start out doing options and then you could build it up. I think 5,000 is a good amount. I still consider that a small account. You won't be cramped. You could be in a couple things. Again, I think that's normal. That was a good question. Any other questions, Paul, or anybody else? Again, 5,000 isn't the minimum. You can open an options account with $2,000, but then I really wouldn't do more than one thing at a time. Honestly, I would be very careful. Anyways, as I was saying, I get up in the morning and measure gaps, rating them with a daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day, a big move in the day, early confirmation of my bias in the move between 9:30 and 10, and precise entries with follow through and a good risk to reward target potential. So I'm looking for big targets, obviously. And again, 1-to-1 is my goal. Many trades are more than 1-to-1, but 1-to-1 is solid. If I'm doing a trade, and again, if I'm in an option and everything looks good and everything looks great, I might be up 300% and decide to hold it. Now, if I decide to do that, which I'm not doing with every single trade, I don't hold everything all the time because the stuff can go against you. But again, I don't have a problem if you really like one thing and you want to hold it. That's fine, okay? Some people do not like to hold overnight. Me personally, I feel like holding options overnight is one of the biggest benefits to trades, okay? Because you can get that overnight move with a fixed risk, all right? And set a money management plan for yourself. Say I have this much cash. I'm going to do options first. I'm going to open up a cash account for 5,000. Then I'm going to build it to 10. Then I'm going to do this. Then I'm going to do margin trades, so on and so forth. You know what I mean? Get a plan. Like we were just talking about, getting organized for 2026. Anyways, one strategy is all you need to be successful in the market. You do not need a general, overall, broad-based view to make money. And I think it's a waste of people's time. I had a couple of people email me about books. There's no book I can give you. I didn't write a book. And I tell you right now, I'll never write a book. I'll never make the time to write a book. And if I would, about trading anyways. If I would write a book, it wouldn't be about trading. It would be some type of motivational book. And it probably would be a great book. But it's something that I would want to actually write myself. So many people, again, I appear on TV, pay other people to write the books for them as ghostwriters, and they plop their name on it. I have no interest in doing that. If I really am going to put my name on something, it will be me. And maybe that's something I'll do, when I retire and stop doing this. Maybe I'll write a book. But it's not going to be about my trading system. It's going to be about motivation and confidence and the ups and downs of doing something like this, which I think a lot of people go through. I mean, I had my own process I went through, and then, of course, I've taught lots and lots of people. And I've heard lots of people's stories. So every story that's out there, I pretty much heard. The best thing I can say to you, if you have a story, if you have a background, if you lost money trading, if you paid for classes and didn't get anything out of it, trust me when I say everyone's been there. No one wakes up and is born and all of a sudden starts trading, takes one class, and figures it all out. That's just not reality. You go through a process. You have to look at it as a process to get to the next step. And then feel positive about that process. Because again, sometimes you gotta take 10 steps forward to take 5 steps back, to take 2 steps forward again, Doesn't mean that you're a failure if you took a class and paid for a class and didn't get anything out of it. But I would say be choosy and picky about the classes that you do and the strategies that you trade, and even the trades that you take. I'm very, very picky. I'm very picky about the trades I take. Honestly, again, I don't have the trading room open all day. I'm not trading all day like a crazy person. I do one thing in the morning. If I do the one trade and it works, I'm done. I close out the room. Boom, done. Again, one trade is all you need. The more trades you have on in the day, things could happen. Like I said, news, all kinds of stuff that can screw up your trades. Options are different. I'll have a couple options on at once because, again, I'm getting the overnight move and I have longer time. So I have more time built in there for the wiggles and jiggles. But again, trading between 9:30 and 4, that's it. That's only 6.5 hours. That's not a lot of time. In fact, it's a very short amount of time. And that's why I like to do the day trades and get done quick. Any questions here? Anyways, a lot of people know a lot about trading. They say, well, I've been trading for this many years. A lot of people have experience trading, but they're not making money, or they're really not making enough money to support themselves or really get anywhere with it. And then if they have a bad period, then they're in the hole. So you've got to learn how to read price patterns and gaps, and you don't need to do anything else. This is what I do. It's technical analysis. It's based on a daily chart. It's advanced technical analysis. You got to have charts. You got to have live data. And again, if your reason for doing this is to make money, this will make you money. Again, you got to learn it. I teach the class. But I've had people come to me, sign up for the options newsletter, trade totally blind, and make money just taking the trade. I suggest people learn it because you will trade better. Actually, Rick, are you here? Rick, are you here? I don't see you chatting, Rick. Do you know how to chat? Rick is a good example because Rick was going to sign up for the options newsletter. He says, I know how to do options. I said, that's fine, but I think you should learn it. And Rick took my advice, and already today he's like, do. And Rick can see already that, again, learning is going to help him. Even though I think, Rick, you did do the visa. You did do the visa, right? Rick, you got to learn how to chat. You go to new chat, click on the plus, and you got to pick my name. You want to do that? You can figure it out. Oh, there you are. Rick figured it out. Wonderful. Anyways, I have last year's Roman options results. I was last year risking an average of $4,500 a trade. I stepped that up to $5,000 now in January for my day trades. So this was an average of $4,500 a day trade. I'll show you the stats for the Rome and the newsletter. I was risking an average of around 8,000 for options. Some were a little bit less, some I bumped up to 9. For now, I'm still risking the same in options. Like, I don't think I'm ready to go to 10 grand on a trade because I do a lot of trades. I'm very, very active with the options. I am not ready to step that up yet. Again, you take the amount of money you have in your account, figure out how many trades you want to do a week. Decide if you want to do day trades or options. You can ask me what I think, like Paul just did. What is a normal risk amount? No one should ever risk their whole account in a week. No one should ever risk their whole account in a day. So you have to think about how much money you have and how many trades you want to take. Okay? Anyways, this was last year. All the winners and losers. The winners are there, and then the losers are in parentheses. This was 2025. So I was a 61% win ratio last year, again with an average risk of 4,500, and it was over 1.5 million. This was the best year, last year I ever had day trading, actually, which is why I bumped up my risk. Again, I've been trading for 18 years. And then options, I almost made it to 4 million. I did not, but I almost did. I'm risking more, obviously, on options. That's why this amount of money is more. But when I have a good week, I may have a huge week, over 100 grand. When I have a bad week, I might lose 50 or 60 or 70. So you got to be able to go through the swings if you're going to do all the trades with me. And that's something you need to think about too. I might have a busy week where I do 20 options, which could be in the next week. Why? Because it's earnings season. Or if we do something with the market. Now, if you're like, oh my God, I can't do 20 trades at once, then that's what I'm saying. You say, okay, I'm going to do 5 trades a week, which is basically 1 a day. And then you set your risk. And I think that's normal. That's fine. Anyways, my win ratio for options was 67%. But we didn't have any losing weeks in day trades. I did have some losing weeks if you go through the stats in options, because sometimes I'm against the market direction. So if I get the market direction wrong, I could have a losing week in options, but I really don't have any losing week in day trades. So again, it's how you want to trade. You say, well, how do you get these big numbers then in a higher win ratio with options? I have more time. I have more time with an option. Let me see if I can put this up for you. Let me know if you see this here. Can you see this chart? Can you see the chart or not? Hello? Hello, is anyone alive? Paul said yes. Dan said yes. Rick and Andy said yes. Now, I will tell you, I did this trade, LMT. Again, long story short, this was last week, and did it, and then Trump said something, doo-ba-doo-ba-doo, and the whole thing tanked. So if I had, so I did an option, okay, but if I had gone long as a day trade here, I would have lost. Why? Because the trade, this was a call, just so you know. So this is a call. If I had gone long, I would have lost as a day trade. But as it turns out, I had plenty of time for it to go back in my favor, which it did, And then it went boom, 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 boom. So again, it's half a dozen one or the other. I like the fast trades with day trades. I know where I am every night. By the end of the night, I'm flat. I know if I won or lost. And again, I'm very consistent with my day trades. I don't have any losing weeks. I don't think at all last year in 2025 day trading. But I might have a week where I lose in options, which is why I'm telling you, size yourself accordingly with your account. But if I'm in an option and it goes against me, I will go to bed with the trade totally down, which this thing was that day when Trump tweeted whatever, I forget what. And then the next day I got up, poof, and it went. And I said, here we go, we're going. And it went do-do-do-do-do. And from this day, it was literally all the way down here at 496. And today was up at 565, almost 563, which is crazy. So it's over 60 points of a move it had then, like in a couple of days. So again, you have more time when you do options, which I like, but you are carrying the overnight risk. So that's the other reason. Someone was asking, well, how much money should I risk? Again, you have to be able to go to bed and say, well, I risk $1,000. Can I be okay with that? And you need to be okay with that. So I don't use stops in my options trades. The risk is the stop. That's it. That's it. In fact, Rick, I think you asked me that in the phone. It's like, that's it. You got to be willing to take the risk of whatever you risk and come up with a number that you're okay with. Because if you kill this trade here, which is the day that I called it, you totally missed a beautiful trade. You missed a beautiful trade. And you can still be in this. Day trade is a margin trade, Rick. You're going to learn that in the class. That's if you short Visa with 1,000 shares or something. That's what I mean, a margin trade. Does that make sense? Steve, saying okay. Anyways, I forgot what I was saying. Let's go back to this. Anyway, so it's the same system though. I use the same system, but my timing is different because I'm getting in and out of the day trades quick and I'm giving the options more time. Some people are not fast and quick. They like the options because they don't have to quick, get in and get out. I like both. I like the fast trades. I like the day trades. I like shorting, boom, get in and out in 5 minutes. I like it. And there's a lot of people in the room with me that like that too. If you can't react quickly, then again, do the option. Do the option, okay? But I'm also risking more so I can take more size. So again, this was last year's results. It was a good year. It was a good year, 2025. And again, I've stepped up my risk for day trades. I'm leaving my risk the same for options. We'll see. Again, the time to change risk is not until earnings season. And then stay with that. It's not like you have to pick your risk now and they have to be the whole year, but I wouldn't change it now till the next quarter. You know what I mean? And if you're new and you're starting new with me, you could even start, with 100 share lots or one contract, or just trade in a demo till you get the hang of it. No one says you have to go hog wild. Now, if you're experienced and you want to go hog wild and you have the money, fine. Any other questions here? How are we doing? So anyways, this is total 2025 year's results, 5,533,691, and that's until the end of last year, and we'll see what this year brings. So in order to become successful in the market, you have to become a specialist. A specialist is one specific strategy, a strategy that reads institutional money, or what I call power money in the market. This brings momentum and opportunity. Every trader on every level must learn this skill set. It can be acquired through education, and that is why learning is so important. Again, I go through the points in the morning. I go through the checklist. I rate the gap. It helps me figure out what I'm doing. What do I want to do? Visa? Do I want to do Microsoft? Whatever, okay? Any other questions? Now, this is Google this week. We didn't do this week, but Google had a pop. Google's moving up, made brand new all-time highs. And we did this last year. We did an option in it. This was December. Just to show you, if you want to join the newsletter, this is what it looks like. You get the symbol, the strike, the expiration date. Again, this was last year. And the type. It's either a call or a put. So you would buy the Google 305 puts that expire 12/19 if you wanted to do the trade, which I called on the 16th. So let's go look at the Google. Okay. And then it went boom. So you see this fell, take it over, came all the way down, boom. Again, this is momentum, fell $5 through the strike, and you could be in and out. Boom, boom, you're out. See it? Well, that was a nice move. And this was not expensive. $2 for one. Could have bought one. That's it. You could have just spent $200. Again, I'm risking a advanced trader risk. You could risk 1,000. You could risk whatever you want to risk, but your sizing has to be equal or the same. It was a nice trade. It was almost 300%. It was a big fat move to the downside. Sold it at 760. Profit was 22,400. Got in, got out. So this was an overnight hold, but it was a quick trade. It was a fast trade. Any other questions? Now, I know some of you are in other countries. I do have people from all over the place now. I have someone that comes like 2 days a week. He's in Australia. You know, I have people very far away in different time zones. Again, people are getting the options newsletters, but as far as the room goes, you have to be there in the morning. 9 a.m. we open, 9:20 is a cutoff to get in, and we start trading right out of the gate. You don't have to be in New York to do this. You don't have to come to New York to do the class. The class is online, okay? You log into your computer to take the class. And it's a nice thing because, again, you can live anywhere in the world and trade. Again, the market hours are where I live in New York time zone, 9:30 Eastern to 4, okay? And you could only trade options between 9:30 and 4. Here was another nice move. This was a sell-off we had in December. I don't even remember the reason we had this sell-off. We did the 600 QQQ puts. Again, you'd buy the put to enter it. You would sell it to exit it. We're not doing any fancy-dancy option things. Now, this I called it 1039, the 16th. Let's take a look at it here. So I called this here. It rallied, then it gapped up, then it tanked, and then it fell. Snug as a bug, just like the Google right there. See it? So again, this is momentum to the downside. Okay, again, a put is a short, and you would take the trade when you get it. You would just enter the trade. And again, this is another one where you'd have to let the trade play out. The trade did not go the day that I called it. You have to let the trade go to its normal conclusion. This was cheap too. $2, sold at $4. Again, part of the reason this was so cheap when I called this was it was nowhere near $600. So it was way away from the strike because some of the market puts now or end calls are much more expensive. This was 100% return investment, a nice trade. If you'd have risked 1,000, you would have made 1,000. Anyways, we're talking about how many trades to take a week. All you need is one. And again, if I am calling 5 options on Monday, just do one. Just do one. Do one a day then. Do what you can handle. Again, your goal is to make money. That's what you're here for. And that's why I think it's so important for people to understand what to do, because if you understand what to do, you're going to trade much, much better. This was another nice short we had in December. This was Marvell. We did the 86 puts on the 12th. Let's go back and look at the Marvell here. Here it was. Closed here, gap down, rallied, fell. Take it over. See where this fell. This fell all the way down. And so I usually do it at the money. But again, sometimes like with the market, I'll do it away from the strike. And if I do that, then that's the target. Then that's the target. Okay, so this one you could have got out right away, or you could have held it a couple days. This one never did anything wrong though after the first day. This was 115% return on investment. Again, these are relatively inexpensive options, to be honest with you. We're not doing anything crazy. Okay. And then we did NVIDIA. Again, this was December. We did the 175s. This had a beautiful move on the 12th. Go back over here. Again, fell, dropped, boom, boom, boom. Here's the sell-off. Here's the sell-off. Again, take it over. This went all the way to 170. So we did this, again, above the strike, and then it fell down. See it? This was $1.50. So cheap. Again, one of the reasons that people love to do options is because they're cheap compared to shorting the stock. In order to short a $175 share stock, you have to have obviously a margin account. And again, even if you wanted to take 1,000 shares or 10 contracts, again, very different cost associated with this and different type of account. So when I say I'm doing a day trade, I'm shorting the stock on shares. When I'm doing an option, I'm buying the put. I'm just paying what it costs. And that's all I have at risk, no matter what happens, if the trade wins or loses. But this was a nice profit, 21,000, risking 9,000, return on investment 233%. You could have done one. You could have risked $150 and you would have made money. This was a good, solid trade. Any questions here so far? Can I see you? You were going to join the options newsletter and then you didn't. I know what happened to you. Any other people here? Anyways, how do you make money in the market? You got to get good. You got to get good, you know, and that takes learning, understanding what to do. And you got to determine who's in control. If the bulls are in control, you want to be long. If the bears are in control, obviously then you'd want to be short. You're not going to make money if you are in the wrong direction. Do you follow me? So again, if, just making this up, if you were long Visa today, you lost. Visa was a short, okay? So again, we got in, we shorted it. You could have bought a put, you could have shorted the stock. We did both. But again, determining who is in control is the only way you're going to consistently make money. Because if you get the direction right, you're going to win. And if you get the direction wrong, you're going to lose. And I know this sounds very simplistic, but it's the ABCs of trading. And I think the hardest part for people is they just can't figure out what direction something's going to go. They are getting confused. Again, like I said, people go long and short the same stock the same day, which is a big fat no-no, okay? And I never do that. And you're never going to really understand what to do or have any conviction if you're doing that. So again, Microsoft, similar to the Visa, big fat red bar, big sell-off. Again, if you were long this today, you lost. It was a short. Any questions? I see some people that came in late. We've been talking here since 4. If you want to ask questions, you got to click on the new chat and ask me a question from that point. So again, how can you become successful trading? You need a winning strategy. You learn it first. Again, you want to trade small size, that's fine. You want to trade in a demo at first, that's fine. But you got to learn it. That helps you take the risk. Then you need a supportive mentor, okay? And that's me, where you follow me. I call Visa short, you do it. I call put in Visa, you do it. Again, everyone's sizing themselves differently depending on the size of their account. You can ask me what I think, and if I get out, I get out. Like we got out of the Visa today, I could have held it. If you want to hold longer, that's on you. And then number 3, implement a winning mindset. And again, that is you trade with conviction. You're confident in what you do. You believe in the system, and more importantly, you believe in yourself. So again, we started talking about this earlier. Just go over it again. What is a gap? A stock gap on the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Here was MasterCard. So again, this is kind of expensive, but it worked. We could have done a day trade in this. I saw it. We did the day trade in Visa instead. Stock closed here yesterday, gap down, fell off a cliff. This is a monster move, even for something at this price point for the stock. And this is selling, it's selling pressure. So again, you'd want to be short that, but that also depicts a gap. So what is a golden gap? A golden gap is a gap that rates 20 points or more per the golden gap point rating system. This is what I do. This is what I teach in the class. This is what I do every morning, what I'm going to do tomorrow, the next day after that, the next day after that. Again, you can do this yourself once you learn how to do it. You don't need me. But I think people like the live room because I'm calling the trades live in the room and it helps them. You know what I mean? And of course, I have a lot of experience. You take the trade in the direction of the gap, always. And if you don't want to do it, then don't do it. Say, well, I don't believe it. I don't think it's going to do that. Then skip it. If it goes on to work, you'll learn something. You go back and review it, and you'll learn something, which is important too. You say, oh, crap, I should have done that Visa. Go back, review it. Figure out why you didn't like it, and then adjust. You know what I mean? You can do the trade as a day trader or an option, and I like to do both. And I also prefer to short. Shorting is it, people. Again, I said this earlier. If you don't know how to short in 2026, you're basically going to be screwed. There's going to be a lot of things that do not continue higher, and they could even start to be that way this quarter with earnings season coming out. What happened today with JPM? It had earnings and it collapsed. A lot of people weren't expecting that. It was actually up this morning on the earnings initially. You've got to learn how to play both sides. Now, I happen to prefer to short, but I will go long. I mean, we just talked about the LMT. But my focus is shorting because I found that gives me a niche because a lot of people actually don't know how to short. So here was the Visa today. We were talking about earlier. Some of you in here that are already trading with me did it. Stock closed here, gap down, fell off a planet. Boom. Again, wherever you get out, you get out. If you were in the right direction here, if you were in a put, if you were in a short, you made money if you did this today. Again, if you went long, you lost. So how do I do this? So rate gaps with a 26-point checklist. This is what you learn in the class with me. This is the system. All you need is a daily chart. You could use it to day trade. You could use it for swing trades. You could use it for options, whatever works for you. I don't need a perfect score. I'm looking for 20 points or more. But that rating system, that what I use every day, that's what helps me determine the control. Because that's the only way I'm going to make money. If I'm on the side of the control, I feel very confident or a high level of confidence I'm going to make money. Again, it may take a day or two or longer for the option to go, but I feel confident that I've got it right. If I'm rated and it rates 20 points or more, that I'm going to get it. Again, LMT is a great example of that because the trade really was a huge trade and you can still be in it, you know, because it doesn't expire till Friday and today's only Tuesday. But again, if you just killed it, you missed it. You took a loss in something that went on to work. So gaps happen in the market on a regular basis, which is good. Again, it's earnings season, so it's a busy time, so there's a lot of gaps right now. However, some gaps are better than others, and some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. Visa was an example of that. And that was an earnings gap, was news. The most important gaps in the market are gaps that signify a change of direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring, which is important. That is how you know when the power and money will flow to pay you. So again, you've got to read the footprints of institutional money. MasterCard and Visa are just two great examples of that today because you never have a move like that with retail traders. Never, 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 never in a million years. One, they're expensive. Two, was a huge volume. And three, was monster moves. So institutional money is what helps you get the big move. You can't move it. But if you're in it, and you can predict that institutional money is going to continue to move in the direction of the gap, you just let it take it. You just let it take the trade away, poo, and it takes it to where it's going to go. If you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction, okay, which today, again, we were short Visa, and get out after the move happens for profit. But you have to understand how to trade with this side of power, and you need to know how to find it. It's so important. Knowing how to read what institutional money looks like is essential to becoming a successful trader. And you can win big trading on the side of power. You can win really big, okay? Again, we were already in Microsoft before this move happened today. And if anybody stayed with the trade, they got it. And that still could be lower too, but that was made with institutional money. Again, it's not just the price points, it's the size of the bars. You need conviction to make money. And you get that from understanding why. You can say, well, I don't really need to understand. Listen, understand human nature. Human nature is that you will trade better and be more relaxed and you'll make more money if you understand why. Because human nature is we want to know why. Why did this work? Why did that go so big? Why didn't this work? We want to know why. We're curious. Okay? Yeah, Trump came out. That was the news on the Visa MasterCard, which came out whatever that was a couple of days ago. Sunday, I think he dropped that news, or Monday night, I forget. And those moved. And then you had the bank earnings today as well. So again, you can have gaps for news. You can have gaps for earnings. You can have gaps for the sector. You can have gaps for lots of reasons. Okay? Which is nice. Okay, I'm just saying it's a busy time right now because it's earnings season. But again, you can have gaps for a bazillion reasons. It doesn't matter as long as it's a good gap. So I'm using a 26-point checklist. This is what you'll learn from me in the class. And if you think about it, it makes total sense. You're like, okay, if I take something in the direction that institutional money is moving it up or down, it's going to be easier for me to make money and I'll get a bigger move. It also makes sense when you think about it, how stocks fall faster than they rally. So you can make money quicker shorting. You can understand that too. Makes sense. You know what I mean? And this is why I've gravitated towards shorts. Rick saying stocks take the staircase up and the elevator down is your take. That's absolutely true. It's absolutely true. And again, remember, stocks fall because of something called panic. Panic is, like you're seeing all these protests on TV. Like it's 24/7 on Fox lately, these protests like in Minnesota and other places where people are panicking and screaming and panicking in a crowd. So again, that kind of panic action is, same thing happens, again, it's human nature. So if you are relaxed and in control, you can capitalize on that panic. I mean, I hate to say it, but that's true. You're capitalizing on the panic and you're going to make money off of that if you pick the right thing. Like, I don't know where the market goes in the next week because, again, we have all these earnings. But I'm telling you right now, if the market would sell off, people would panic unbelievably. Could happen, And people aren't ready for it, actually, if it does happen. Because people have such a bullish bias, even this year. They're not prepared. Like I said, people are not prepared. Dan says people are overconfident. You mean people that are bullish? Is that what you mean in the market, or what do you mean? Or just in general, or? I think there's some truth to that in general, people that went long every dip last year in 2025 are overly confident, think they know how to trade, think they know how to make money. If they made money from April up until the fall, yes, that's true. And again, there's different scenarios where you could make money doing a certain thing during a certain time period where you could make money, be successful, but it doesn't mean it works forever or under any market conditions. And that's the trap for people. And I'm telling people that, you know what I mean? No, Rick, you have to be there live, which you're going to be. But every day in the room, I'm there to ask questions. Rick, I haven't seen you in the room. I know you know how to log in because I saw you log in a couple times in the middle of the night, but the room wasn't open. But you got to get there if you can tomorrow or something. Dan is saying he knows people are bragging about the retirement accounts, but what happens after? Well, it depends how old you are. I don't want to get too off topic here, but if you're, young enough, just you have plenty of time. I'm not saying even if the market crashes that we, reverse trend and go in a downtrend and then, have like 2 or 3 years of selling. I'm not saying that. Typically in the life of the market, you do have wiggles and jiggles though. And we had a very bullish year last year. So to expect that there wouldn't be any wiggles and jiggles is not realistic. It's just not realistic. And I think that's the thing. That's what Dan's saying. People are overly confident. Over 50 is young. Rick's saying it's been a long time since you were in school. You'll be fine. You'll be fine. There was something else I was going to say. I forget. All right, when I trade, I'm looking for in trading momentum. And then whether you have a small size or large size, you will get a good risk to reward. And we were talking about that too. Now, how to navigate this market with constant news. I don't know if anybody saw this. I'm sure some of you did. When Powell dropped the video Sunday night. Now, when that happened, the market was down huge in the futures, if you watched them. And then Monday morning early. Then we lifted. Then we rallied. And the market seemed to shake it off. But let me tell you something. This could be the beginning of the end of Powell. And this is not the end of the story. So everyone's like, oh, the market ignored it. Boo-doo-boo-doo. No. The market shook it off on Monday. That's true. But this issue is going to come up again. You need to know what's going on of things that could affect your trades. That's why you can't hold every trade to a piggy target. Again, I said earlier, if you want to hold something, you pick and choose. You could be in 5 things. You say, you could be up in all 5. You say, I'm going to hold 3 and get out of 2. Or I'm going to hold 2 and get out of 3. You can't be a pig Because if you're a pig in everything, you're going to get burned. And the worst thing you could do is be up in 5 trades and then losing them all. Because we are in well, I used to say a 24-hour news cycle. We're in a minute-by-minute news cycle. I'll literally, get up in the morning, see 1,000 things all day, go to bed at night, and there'll be 1,000 things that happen overnight. I mean, again, I appear on news channels, so I have to know what's going on, plus I trade, but I mean, the news cycle now, I've never seen anything like the last 12 months. And it's going to continue. So again, this drama with the Fed is going to continue. And you need to know that, and you need to be aware of it, and the tariff drama too. The Supreme Court did not make a decision yet about the tariffs for Trump. That decision is most likely going to come the month of January. It could be tomorrow. I don't know when it's going to be. They met today. I was listening to today was about the trans stuff. That's going to create volatility. So there's just so many things going on. I'm just telling you, this is going to affect your trades. And that's why it's so important to know what to do. Okay? Anyways, any other questions here? 50 is young, Dan. A long time. Anyways, institutional money is in charge of the market and stocks at all times. A big flow of money going in a certain direction is what moves the market stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. If you understand that, you will trade a lot better. Okay? So number 1, how to be successful, you need a good system and strategy. Number 2, you need a supportive mentor, which is me. So I'm here. If you want to call me and ask me questions before you sign up, or even after you pay, after you do the class, you can still call me on the phone and ask me questions. You can ask me questions every day in the room where I have the charts to go through things. You can email me. I'm not going to disappear. So again, if you want to follow my trades, you do and follow. You be there live. You show up for the room. Listening to the things in the commentary I say in the morning is the best place to be, even if you're just doing options, because I say what I think about the market and I say what I think about the stocks we're doing. But really, trading is about consistency. And I think for me, like I said, I've been trading for so long now, that, and not doing any other strategy but this, which is gaps and mostly shorting. I've reached that level of consistency where I have the confidence. And if you're new, you want to build up that confidence with yourself. So following me and getting green and taking positive trades, it helps your confidence. It helps your confidence. You want to do everything you can to help your confidence. Learning, doing a class helps your confidence. Getting green, making money in trades on a consistent basis helps your confidence. Growing your account helps your confidence. You know what I mean? And then just time as you're doing it. So here was the last week of 2025's trades. We did Oracle. We did Oracle a lot in December. We did 2 trades on the 16th. One lost, 1-1 in the Qs, Oracle, and then Mu. I'm going to go over these really quickly. These are day trades. So again, don't get confused. These are not options, but this is what I do every day. So we entered the stock in Oracle here, 12.12, shorted it, again, added, got the drop. This was a huge, huge trade. Here's the 12th. And it may not even look like much, but it was $10. So again, from the tip to tail here, this is actually a sizable bar. Now, if you're like, oh, that's too expensive for me, you could have bought a put, and we did do puts in this. I did a put here on this day. The put reversed. I was down. I stayed with the train, and then the put went, and I got to hold it. But here was the day trade. So again, if you want to do options, do options. If you want to do day trades, do day trades. Then we did on the 15th, we did it again. Close here, gap down, boom. Shorted it, got in, got out. Again, this is a margin trade. Again, shorted shares. You could do 100 shares, whatever you want to do. And then on the 16th, I did the market, which the first trade I lost. Here, I lost to the first trade here. Then I made money in the second trade. This was a short. That was on the 16th. Then the 18th, we did Mu, which was a long, which is kind of crazy when you look at it because Mu gapped up, rallied. I went long this here, got out before it fell, or I would have lost, actually. So I went long and made money here, even though it was red. It was a good trade. And then you could have bought a call here, and then you could have got the move up. And you actually could have done it here, too. Could have done it the second day. This was the easier day here to do the Mu. And then that was the week. And the 19th I was off, and then I was off for the holidays. So again, had some big trades in December, and they were shorts. They were shorts. Again, I prefer to short. And again, if I find a good long, I'll go long, but I prefer to short. And that's really my niche and what you'll learn from me. So again, I was talking about less is more. Focus on quality trades. Focus on one trade a day. And especially if you're new, I would come into the room. I would size yourself so you can understand what to do. And again, the day trades happen fast. The options are not as quick. So that's fine. You have to be okay with holding them overnight though. But people come into my room with a mindset that they expect to win. We're very serious in the room. You got to be on time. I'm the only one that talks. And I call the trades. You do it with me. Everyone's taking a different size. Even people that are doing options, some people are day trading options, which I'm not doing, but they are. One guy today in the room did the Visa put. He got in, got out quick in a couple minutes that I did the day trade. And he made money. He made money because it had a big move. Again, Visa is a weekly option, but he did it and got out today. So in 5 minutes. So it's whatever works for you. Any questions here about anything? Again, I see some new people. I see some regulars. So again, the room, I think it's important to be there. You can chunk it out of the room to get to your goals. It's really important to not overtax yourself when you're trading because there's no getting away from the risk. There's stress involved with taking risk. I was talking about this with my broker on Monday. You know, she was telling me, I don't like to lose. She trades too. No one likes to lose. So there is stress involved with taking risk. You're never going to get around taking risk if you want to make money. That's why you have to be like normal with yourself and say, am I worried about this risk? If you are, chances are your risk is too great. Back it off. Do you know what I'm saying? The other thing is, if you're stressed out and you're in a trade, chances are you don't even know why you're in the trade or you shouldn't be in it. You don't understand it. Maybe it has no basis for anything you should be doing. Maybe there's no system behind it. Again, when I look at something, I am determining the rating. I'm saying I took this trade because it rates 22 points. And that allows me to take it. And it helps you feel not so stressed. Because there's no taking away where you're at zero stress. And I'm just being normal here. It doesn't matter how much money you have. You could have $10 million in a trading account. Say, I have money. I can take risk. It doesn't matter. No one wants to lose. No one wants to lose. It doesn't matter if your account is small or medium or absolutely huge. No one wants to lose. No one wants to lose. And that's why you have to understand what you're doing. And if you have a trade that loses, know the next 5 or whatever are going to work. And that's how you keep going on. And again, what happens is if people don't have a good system, don't believe in the system, don't have conviction in the system, or don't have a system at all, they get all in their head about it, stressed and everything else. Any questions here? Anyways, I'm mostly short. We're talking about that with panic. And then besides having a good system, having a mentor, you got to focus. So I become an expert in one thing, and it's shorting, and it's really gaps. And I think as long as you have all these pieces of the puzzle together, the only thing you have to determine is your money management. Are you going to take the trade and let it play out, which is what I do for options? I use a stop. It's a limit order stop for my day trades. Set a certain amount of trades you want to do a week. Pick your risk. Be consistent with that. And again, say, I'm going to do all the day trades Melissa does in the room, or I'm going to do one option a day, whatever. But again, for me, shorting is extremely profitable. People don't know how to short. It's fear, it's panic, it's the big moves. Again, there was a lot of things today I could have pointed out. Besides the trades from December, just whenever, there was a lot of things that happened just recently, just this year, of stuff that's falling. It's the consistency in what I do that makes me successful. And the number of years I've been doing it. And I think that, again, if there's any one piece of advice I could give you, which I said earlier an hour ago, you have to stick with it. If you're not consistent with what you do, you're going to be all over the place with your results. It's the consistency in my risk, and again, what I do with the system. So one of the cornerstones of everlasting trading success is consistency. And I'm telling you, a lot of people are just not, because they're always jumping around for the next get rich quick thing. And that's not reality. You know, some days are easy. Like today was easy, but some days are hard. It's work. I might have to rate 10 things, and then I'm trying to narrow it down, and then I'm trying to look at them all in the open. Do you know what I mean? Like, it's worth it though. It's so worth it, okay? You've got to use your brain. But anyways, without this type of consistency, it's hard to stay in the market for any length of time. In order to be consistent, a person needs proper focus on what counts. For me, I focus on stocks that are being moved or controlled by institutional money. And how do I determine that? I rate the gap. So how do I know what stock to trade each day? I scan, I rate them. I'm looking for the power money. I'm looking for the control. This was the best gap today. Or MasterCard, which we could have done as a day trade too. But I do like to do one thing at a time. I just think it's a lot easier to do one thing at a time. So if you want to kind of learn from me, you will learn how to find gaps and rate them using a checklist. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock. And again, this is charts. So it's not like you can't learn it. Of course you can learn it. You're going to learn how to read a chart. A lot of people think they know how to, and they don't. They have all these fake indicators all over the place, and it's not telling them anything. We're reading price action. We're predicting strength and weakness. Understanding chart reading of gaps and how important the patterns of price are in the market will assist you in being profitable. Reading power money when it sets up will help give you conviction to trade. Seeing when and where the power money positions are getting in is like finding a gold mine, and that's how I ended up calling my system the Golden Gap. Seeing gaps clearly and how they are creating trends, changing trends, and making momentum is a powerful way to trade. You can use this information to enter trades so you can get paid and make money. And again, you can do this for day trades or for options. But it is technical analysis. So you have to have live charts and live data. Again, if you want to do this, you learn the system. You decide what stocks you want to trade. You take the class, you rate them. You show up for the room every morning. You can do the day trades. You can do the options. You can say, I'm going to do this many trades a day or this many trades a week. You look at the cash you have. See if you can do a margin account, or if you want to do an options account. Some people are trading their retirement account. Again, you can buy a put, or you should be able to in a retirement account. You can't short on margin, but you should be able to buy a put. Okay? Any questions here? So again, this is not like, brain surgery. You just got to learn it. And then the more you do it, the better you get. So again, I do the work every day, which is why people like coming in the room, because, I do the work. I'm going through and I'm saying Visa's the best one, but you should be doing it yourself. Once you learn and take the class, you should do it yourself. That's the whole point, because you're risking your own money and you have to press the button to get in. So again, I'm looking for a high probability of directional bias for the entire day, big move, early confirmation, precise entries, and a good risk to reward. So think about it. It makes sense that going with institutional money is how you're going to make a lot of money. It makes sense that stocks fall faster than they rally. Makes sense you could make a lot of money shorting because of panic. A lot of day traders don't know how to short. I mean, all of this makes sense. So the system I use to find the right gap each day is called the Golden Gap 26-point checklist. This is what you learn in the class. So I say empower yourself today, because really it is you. It is you. It is you that are figuring out, you that are doing it. You're using your brain. I'm here to answer questions for you. I'm here to teach you and give you the support. But again, if you believe in yourself, you will go through the process. And even if you make boo-boos or mistakes, you'll learn from those mistakes. You understand? So the Golden Gap course is a complete system to use to trade. You'll learn all the entries, all the exits, the targets, and you'll learn the 26 points. Rick, you were asked about the exits. You will learn that in the class. So the class is called the Golden Gap course. This is a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. The class is next weekend, January 24th and 25th at 9 a.m. to 5 p.m. Eastern Time. Class is online. Again, the price of the class is $69.99. You can be anywhere in the world and take it. Any questions from anyone? If you're interested, you can email me for sign-up forms. I also have the trends class, which is on the Tuesday after that class, that is for options. Swing trades or long-term trends. Some people are signed up for that already as well. That is on Tuesday, the 27th, and that's from 11 to 3. This class is on a weekend. And if you just want to sign up for the options newsletter, you can. That's $69.99 for 12 months and $49.99 for 6 months subscription. Dan, I hope you can join this year. I really do. I don't know if you can join this class. I know you wanted to join for a while now. Any new people, any old people, any questions here before I let everybody go? Rick is signed up. Rick, you got to get into the room. Rick said, thank you, Melissa. You're so glad I found you. Wonderful. You made money already, Rick. I don't know if you did everything, but how much money, if you want to tell me, how much did you make so far? Mike, hopefully you'll do the class. I know you've been following me a while too. Ken, hopefully you will join. Ken, I know you were going to join last year. Steve, how are you doing? Rick made $1,200. That's fabulous. And you didn't even know what the heck you were doing. And you didn't even know what the heck you were doing. Are you in anything right now, Rick? Or are you flat? Or are you just flat? Okay, you're in one thing. Is a newsletter for options short and long? Yes. Yes, it is. I don't know if you were here. Jurgen, I'm not sure if I pronounced your name right. I don't know if you were here. I called a call in this. This was a long. And again, you could still be in it, LMT. So this was a long. Visa was a put. So yes, we do. In fact, I probably do more longs on the options newsletter than in the room. I'm not saying I never go long in the room as a day trade. I'm not saying that because I do sometimes. I mean, I showed you the one from December. But it's a pretty good mix on the newsletter. Whereas in the room, we're mostly shorting. I don't know what the percentage is, but it's probably between 85 and 90% of the daily trades in the room, the margin trades are shorts, whereas the options newsletter throughout the year is a mix. So since the year started, I've already called longs and shorts. We did this long too. Andy had emailed me about this. This was a good call. And you could still be in this too. So again, if you don't do the class and you want to sign up for the options letter, you can do that and get tomorrow's trades. I mean, again, we'll see what happens tomorrow. Let's just look here. There was some news out on NVIDIA, and then the market went boom, and then it fell. That was around that time there. I didn't send out a notification because it really wasn't a big deal, but there was a news here in NVIDIA. We're not in NVIDIA, and then it just fell off again anyways, but that's what that was about. Let's find that NVIDIA. See, this happened all here. So anyways, just think about what I'm saying here as far as this year. There's plenty of time to get in and start learning and trading. And it's a good time because there's a lot of things. I mean, the Visa was a big move today. If you didn't trade with me, you didn't get it unless you did it on your own or saw it. But this wasn't earnings. But I'm telling you, there's going to be a lot of trades like this in the next 8 weeks because earnings season is a time when stocks have big moves. We don't know when we're going to get them. I didn't plan on this. I didn't plan it. You don't know till you see it. That's part of the exciting thing about trading. Sometimes you get a big one and it falls into your lap and you don't know. That's the exciting thing. And every day I'm doing something different. I have no idea what I'm doing tomorrow. I have no idea. But that's what makes it exciting. You know what I'm saying? You're never going to be bored trading with me. I can tell you that much. Any other questions? Again, I see some new people. I don't know what you're thinking. You can also email me here. If you have questions, you can email me, or if you want to sign up. Jurgen has another question. Hopefully you'll join. I know you've been following me for a while. Some of you were like waiting for, I don't know, like a rocket ship. I don't know, to join. Rick said he was following me for a while, and then he jumped in. He jumped in, boom. He's pulled the trigger and did it. And he's already made $1,200 in 2 days, so good for him. Rick, try to get in the room tomorrow so you can test it out and chat and stuff like that in the room, please, in case you need support help. Or if not, tomorrow, Thursday. 2 years you were following me, Rick. Oh my God. Well, I've had people follow me for longer than that have done the class, if you can even believe it. I have people following me since I started that still haven't done the class, if you can even believe that. And I'm just guessing, Rick. You can tell me if I'm right or wrong. I'm just taking a shot here. You probably signed up for other classes that were cheaper than mine or other services before you jumped into me. I don't know why people do that. I don't know why. It's like people just, they say, well, it's $1,000. Let me try this out. And then people, like, I mean, why would you spend $1,000 if you don't think it's going to work? But that's what people do. They say, well, it's $500, it's $2,000, it's $2,500, it's $1,000. Let me just try it. And then inevitably, it doesn't work. And then people keep following me. And then eventually they pull the trigger and spend, the $7,000. Rick said yes. Yeah. Well, hopefully you can soon, Jurgen. Hopefully you can soon this year, 2026. Tell you, it's going to be a big year. It's going to be a big year. Listen, I'm going to make dinner. I'm going to go to bed, get up tomorrow, trade. Email me if you have questions at melissa@thestockswoosh.com, and have a wonderful, wonderful evening.